All right, welcome to another episode of Business Explorer on Friday, January 8th, 2021. So let's jump right into exploring what's going on in the markets. This first article comes from CBS News. Second stimulus check. Millions facing delays for $600 checks. The IRS started delivering the second round of stimulus checks into millions of bank accounts this week, providing $600 for each eligible adult and child. But as many as 13 million people may experience a delay in receiving their money after the IRS sent the funds to closed or invalid bank accounts, according to tax prep company Jackson Hewitt. Some people who don't receive their checks may need to wait to file their 2020 taxes, when they can claim the stimulus payment as a tax rebate, the IRS said. That could mean at least several more weeks of waiting for their stimulus checks, which would be sent via tax refunds. The IRS typically begins accepting tax returns for the prior calendar year at the end of January and starts processing them in February. The latest glitch in delivering millions of stimulus checks may complicate the recovery effort from the coronavirus pandemic, which has caused 8 million Americans to slip into poverty. In some cases, the IRS sent checks to temporary accounts created by tax prep services such as H&R Block, TurboTax, and Jackson Hewitt, which are typically used for the depositing of tax refunds. But those accounts set up for last year's refunds aren't currently valid, leading to delays in delivering the money. In other cases, people may have closed the accounts they used last year when the IRS distributed the first round of stimulus checks. The tax agency said it's relying on the same bank information it used to deliver the $1,200 checks in the first round of payments last spring and isn't able to update bank information for the current round of $600 checks. Unfortunately, the IRS confirmed that certain processing issues on their end will cause payment delays to many Americans waiting to receive the relief they're eligible for. Mark Steber, the Chief Tax Information Officer at Jackson Hewitt, said in a company blog post. It is estimated that the IRS has inadvertently sent payments to over 13 million bank accounts that are no longer open or valid. H&R Block said on Tuesday it was already receiving a high number of calls and emails from customers. The IRS determines where second stimulus payments were sent, and in some cases, money was sent to a different account than the first stimulus payment last spring, the company said on Twitter. The IRS and Treasury didn't immediately return a request for comment. Payments needed. Even with the previous stimulus aid, millions of Americans are struggling with higher rates of hardship from trouble paying their bills to food insecurity after the coronavirus pandemic upended the economy and cost millions of people their livelihoods. A majority of Americans say they plan to use the $600 checks as soon as they receive them. According to a new survey from Doxo, the bill payment service found that almost 6 in 10 people will use the stimulus funds for household bills, while another 2 in 10 will use the money either to feed their family or pay off credit card bills. Only about 1 in 10 will sock away the money, Doxo reported. The stimulus money won't last for many households, Doxo predicted, noting that the typical mortgage in America costs homeowners more than $1,200 a month, while renters pay an average of more than $1,000 a month. No $600 check. People should visit the Get My Payment site at the IRS website to determine how and when their checks were sent to them. The site should inform people of a direct deposit date and provide account data, which is where their checks were sent. However, some people are reporting they don't recognize the account number, which could well be due to the use of a temporary account set up by their tax prep companies last year. The Get My Payment site will also let people know if their checks were mailed, which could take between 3 to 4 weeks to reach their recipients, the IRS said. The IRS says stimulus checks sent to accounts that were closed or are no longer active must by law be returned to the tax agency. In other words, the financial institutions can't hold and reissue the payments to their customers. In that situation, people will need to wait for their 2020 tax refunds this winter and spring to receive their second stimulus checks, the IRS added. Taxpayers facing that possibility should file for their tax refund as quickly as possible via electronic filing and claim the check through the recovery rebate credit on their 2020 tax returns. The money will be sent through their tax refund, but the IRS hasn't yet opened its systems for 2020 tax returns. Typically, the agency is ready for tax filing at the end of January and accepts tax returns through April 15th. That means people who haven't yet received a stimulus check are facing a wait of weeks or even months to get their payment. So one thing I'm going to talk about with this second stimulus is that it's complete horseshit. They spent over $900 billion in this stimulus package. And according to my math, there's 328.2 million people in this country. And out of $900 billion, each person in the United States, regardless of your income, should have gotten $2,742.23. And yet we're getting a meaningless pittance of $600. So, and there are other pundits out there who have said what's in this stimulus package. There's foreign aid to Pakistan for gender study programs. Why in the hell are we sending money to other countries when we can't even fix our own problems here? We need to get the country open and start getting back to work and not worrying about other countries' issues and trying to bring progressive ideologies to these countries that don't, frankly, necessarily like us. So I have a real issue with that $900 billion. They just spend our money without even thinking about what it's really doing. And they don't represent us anymore. The people in this government, they just don't represent us anymore. And it really pisses me off. So before I get too heated and can't take back something, let's move on to the next story. So the S&P 500, this one comes from CNBC. The S&P 500 heads for winning week despite disappointing jobs report. Washington turmoil. The S&P 500 and NASDAQ composite rose to record highs on Friday, even after the release of data showing the U.S. economy unexpectedly lost jobs last month. Those gains put the market benchmark on track to end the first trading week of 2021 on a high note. The S&P 500 traded 0.4% higher, and the NASDAQ composite advanced 0.8%. The Dow Jones Industrial Average, meanwhile, hovered around the flat line. Consumer discretionary and real estate stocks led the S&P 500 higher, with both sectors rising more than 1% each. Tesla popped 7.7% to an all-time high, lifting the NASDAQ. That's impressive. The U.S. economy lost 140,000 jobs in December, the Labor Department said. Economists polled by Dow Jones expected a gain of 50,000. The unexpected drop in unemployment came as the recent surge in COVID-19 cases across the country has forced state and local governments to retake stricter measures to mitigate the outbreak. More than 21.5 million coronavirus cases have now been confirmed in the U.S., according to data from Johns Hopkins University. Adam Crisafulli, founder of Vital Knowledge, wrote that the weaker than expected print raises the possibility of more government aid from President-elect Joe Biden's administration. Biden's team was already going to be pushing for increased fiscal stimulus, and the December report provides them with even more ammunition to make their case, while the Fed may stop thinking aloud about tapering. Crisafulli said in a note to clients. The benchmark 10-year yield rose to its highest level since March 20, breaking above 1.1%. Friday moves come after a record-setting session. The Dow and S&P 500 closed above 31,000 and 3,800 respectively for the first time on Thursday. It was also the first time that the NASDAQ composite topped 13,000. Stocks started off the new year with a slump on Monday, but the market has since churned higher despite the turmoil in Washington, where a riot at the Capitol on Wednesday delayed the procedural congressional confirmation of presidential-elect Joe Biden's victory. With Friday's gains, the Dow and S&P 500 were headed for 4-day winning streaks. The Dow and S&P 500 are both up more than 1% week to date, along with the NASDAQ. This week also saw Democrats win 2 key Senate races in Georgia, according to NBC News projections, boosting hopes on Wall Street for further fiscal stimulus. On Thursday night, President Trump acknowledged for the first time that a new administration will take over on January 20th. The strategist also said that stocks could make a really big move in the coming weeks as the level of fear in the market declines. Gary Schlossberg, a global strategist at the Wells Fargo Investment Institute, said the market's recent moves could be reinforced by growth in corporate earnings this year. We think that some of the optimism will be manifested to some extent by improved earnings growth, and maybe the market is pricing in some of that as well of late. But we still think that gives the market some added mileage, Schlossberg said. So I just was talking about how they totally screwed us on this recent stimulus where there's $900 billion and each person should have gotten $2,700. And they're already talking about more fiscal stimulus. Where's that stuff going to go? Is it going to go to the people, which I doubt? Or is it going to be sent off to some weird programs that nobody really gives a shit about? This kind of wasteful spending in our government is mind-boggling, and it's rampant across the board. So this last one comes from CNBC as well, and I think it's kind of related because taxes are important to everybody. How concerned investors should be about Biden's tax proposals. Stocks and taxes, what's going to happen? The Democrats' control of Congress has shown a new spotlight on Biden's tax proposals, particularly those that would affect stocks and bonds. While Biden has repeatedly said he would not raise taxes on Americans earning less than $400,000 a year, he has proposed 1. Raising the marginal income tax rate from 37% to 39.6% for those making more than $400,000, raising the corporate tax from $21,000 to $28,000, and a 15% minimum book tax. Taxing long-term capital gains and qualified dividends at the ordinary income tax rate of 39.6% on income above $1 million. Biden's other proposals also have the potential to affect holders of stocks and bonds. For example, he has proposed that those making over $400,000 should be subject to an additional 12.4% Social Security payroll tax split evenly between employers and employees. He's also proposed a change to 401k plans from the current system that allows all savers to take up to $19,500 in income tax deductions each year to a flat refundable tax credit that would give low-income earners a bigger tax break up front and higher-income earners a smaller tax break. What effect will these proposals have on stocks? Will some sectors be more affected than others? Savita Subramanian, forgive me for butchering that name, at Bank of America Securities estimates that the Biden's tax plan would reduce S&P 500 earnings by 7% under the current plan, mostly stemming from higher corporate taxes. Growth-oriented sectors would be hit the hardest. S&P 500 tax hit estimated S&P 500 earnings impact based on Biden's proposals. The technology sector would be down 9.2%, healthcare down 8.4%, communication services down to 8.2%, consumer discretionary down 7.5%, financials down 6.5%. And the source they list is the Bank of America Securities. What effect would these taxes have on stock market behavior? It's complicated, but Dan Weiner, who runs the independent advisor for Vanguard Investors, is chairman of Advisor Investment Management, says the impact on investors from capital gains hike may be more limited than many think. The people who will be most concerned are high-end active traders and some hedge funds. Much of the stock market is with pension funds who have no tax liability. 401k and IRA accounts are not taxed until the money is taken out. Raising taxes on the wealthy will also receive the old debate that raising taxes would not necessarily provide a dramatic increase in revenues. A recent study by the Tax Foundation concluded that Biden's tax proposal would raise $3.3 trillion over the next decade, and that raising capital gains taxes would raise only $469.4 billion over the same time period. A fairly small sum of money. Most of the increase would come from raising the corporate income tax rate and the Social Security payroll tax increase. A separate 2010 study by the Congressional Research Service examined what it called behavioral responses to changes in capital gains taxes. The capital gains tax discourages capital gains realizations because capital gains are only taxed when realized. Because of this, investors may be encouraged to hold suboptimal portfolios or forego investment opportunities with higher pre-tax returns. In other words, when capital gains taxes are high, investors will likely respond by holding on to stocks rather than selling, which makes the market less efficient. This also implies that higher taxes will not necessarily result in higher revenue. One thing most analysts seem to agree on is that it's not about if, only about when. We know that taxes are likely going up, Weiner told me. The question is, will it be 2021 or 2022? I don't think individual tax rates are the bigger concern. I think corporate tax rates and capital gains are going to be the main focus. Weiner believes that major tax changes are unlikely in 2021. It's very unlikely they will try to force a big corporate tax hike this year. Subramanian, citing other sources, also said she expects tax changes to come in 2022 rather than 2021, as the Democrats focus on fiscal stimulus first and tax increases second. But even if a capital gains tax was enacted, Weiner is not sure there would be a massive rush to sell stocks that have had big capital gains for investors in recent years. Why would I rush out to sell stocks that have big capital gains just to avoid the tax? Who is to say someone won't come along in 4 years and lower them again? So this is loaded full of interesting things. So the first thing I want to talk about in this particular article is, so anyone who's read Dr. Thomas Sowell or Milton Friedman, or even just studies history, basic history, what's the point of raising the taxes? What is their end goal? I don't think their end goal is to generate more tax revenue, because it's been proven over and over and over and over and over again that if you want to see higher tax revenue, you should lower the taxes. They move in opposite directions. The lower the tax rate, the more that is collected in tax revenue. This was proven true during the Trump tax cuts. When he enacted the tax cuts, there were several large corporations that were holding money offshore, so they didn't get taxed in the U.S. As soon as those tax cuts came into effect, they repatriated, I forget how many companies there were, it was a half dozen of them, and combined, there was over $1 trillion in money from these companies that got repatriated into the U.S., and as such, got taxed at whatever the tax rate was. So if it was roughly $1 trillion, there was probably close to $200 billion in tax revenue the country would not have seen otherwise had those tax cuts not been enacted. So tax rates and tax revenues always move in opposite directions. Thomas Sowell has a great book on this called Basic Economics, if anyone's interested in reading it. So again, my question is, what is their purpose in raising the taxes? I mean, to the average person who doesn't understand economics, they may think that that's going to increase revenue, but it's going to have the opposite effect. It's going to place a larger barrier to entry on certain aspects of the market. And as this article already talked about, people are going to be reluctant to sell things and get out of things, and it makes the market less efficient. The more efficient the market is, the better off we all are, the better off the entire economy is. So, I'm concerned about how the next couple of years are going to go. I really hope that they put tax increases on the back burner for a while, and I really would like them not to focus on fiscal stimulus unless they're going to actually do something productive, like lowering taxes, or if they're going to do another, $1 trillion stimulus, that the bulk of the American people get that, not foreign aid. So this has been the craziness of the last couple of years, I suppose. So I hope you enjoyed this episode. If you do, please like, comment, share, and subscribe, and we will see you on the next one.